Hello and welcome to another update video about ETH. On the ETH chart, the situation is largely unchanged. Ethereum has come down off this July high only so far in 3 waves down. Traditional Elliott wave interpretation would suggest another low is to come, so that we can wrap up this wave 5, this C wave in 5 waves. So typically you would expect 5 waves in a C wave. Not an absolute must, because it could be a WXY structure which is forming here, and then this low could be in, but typically a WXY is nothing that you primarily look for because the ABC structures are more common, which would suggest one more low is more probable. However, we need to understand that a WXY is always possible, and especially in crypto they like to do these structures. Basically they then look like incomplete corrections. However, they can be complete. It's just that due to the volatility in the crypto space, sometimes you just don't see the sub waves, and they could just be part of that massive flush, that liquidation event that happened. However, primarily we are looking for one more low. And let's zoom in. Confirmation that we are heading down in this 5th wave would be a break below 1605. This is the 78.6 retrace of the move to the upside that happened after that strong drop on Thursday. So this break below that level would strongly suggest that a new low is currently in the making. Until then, it's technically possible that this wave 4 correction extends a little bit. I shared with you yesterday that on the lower time frame we could be in an Elliott wave triangle. I think in the video I showed it to you exactly like this. So this is still valid, and it could be that this here currently is the last wave of the triangle, which, if price breaks above the B wave high at 1694, 1695, would confirm that the C wave to the upside is in the making. Basically that this correction is an A wave, a B wave, and a C wave. Now the C wave would probably run out of space if it's constrained by 1723. However, we have to see how it goes and if we react to that fib level. Certainly resistance above 1720. First of all, is the golden ratio. That would be a little bit too strong for that 4th wave. However, if it's only a 3-wave move up, I still have to count it as a correction. So we would then talk about around about 1759 next, and then 1800. Now be aware that if it breaks above that level, it doesn't mean a lasting low is in place. Doesn't mean that this is the low of wave 2. Necessarily. We would need to see an impulse for that. Okay. If it's doing just an extended correction, it could very much be that it's going to be followed. By another low. For example, in the scenario where we're saying that all of this move up was a wave 1, and then here something like let me think. A, B, no, not that. So all of this wave 1. Yeah, I mean, what could be is that this is a W, X, Y. And then, for example, in the Y wave, A wave down, B wave up, C wave down. So that's why it's so important to watch for the structure of the next rally. If the structure of the next rally continues to be corrective, another lower low is still on the table. And we talk about a substantial decline. So ideally what we are seeing is a break above 1723, which is impulsive. So we need the right structure. Primarily, however, I don't expect really a break above 1723 at this stage, because, as I said, in what I believe is the most likely interpretation, another low is currently on the table. This just looks like standard consolidation, correction after a strong drop, but we need to pay attention. I mean, it depends into which direction we break out. If we break above 1694, then first of all it could get to 1723, and if we break below 1605, then it would strongly suggest that the wave 5 to the downside is in the making, and the next fib levels are 1535 and 1457. So ongoing sideways action, correction. The triangle is just an idea. There are plenty of possible interpretations in this structure, how this could be playing out. Be aware that within corrections, there can be, there are more than 10 corrective patterns in Elliott Wave. So they can always morph and change, it could turn into a WXY. We just need to be open within a correction, what it could be, but it doesn't matter so much. What matters more are these relevant Fibonacci levels. So if I see any more hints in which direction it's going, I will let you know. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.